Good afternoon, everybody, and welcome to Live Market Analysis USA edition. My name is Carl Kaplinger. I'm the market analyst over here at Think Markets, and it's a pleasure to join you as we head stateside to try and find the best of the best stocks to add to your portfolio. The agenda today is pretty simple. It's Ask Me Anything, over to you. Find the chat window on your Zoom screen. If you're joining me on Zoom, that is, type in the stock you're interested in, or could be an ETF. I'll give you my best technical or fundamental reader. Hey, if you're watching me today on any of those streaming services, that is YouTube, Twitter, LinkedIn, Facebook, you've got the ability to pop in a question as well. Let us head over to the charts. We're going to spend much of our time in the charts today, but we'll also, where required, have a look at some of the fundamental valuation metrics for the companies we'll discuss as well. Few suggestions coming in already. One here from Phil, PWR. Let's head over there, which is Quanta Services. Wow, what a fantastic chart. Now, I heard, Phil, somebody on AusBiz and one of their international guests speak about Quanta and tell us how wonderful it is. And looking at the chart, geez, I tend to agree with them. What a fantastic place to start today's presentation, because you all know that my style of technical analysis, and let's face it, I'm 100% technicals. I know we'll do fundamentals today, but I am 100% technicals. All of my decision-making process is based upon the charts, and 0% is based upon anything fundamental. My style of technical analysis is called trend following, and there are different styles of technical analysis. I generally lump them into two camps though. You have the prognosticators, okay? So they're your Elliott waves and your Ganns and your Fibonacci's. You've got a group of technical analysts that are trying to predict. Actually, there are a technical analysis astrologers as well. And what they're trying to do is predict key market turning points in terms of price, in terms of time, dates, okay? Prognosticators. Then you've got the trend followers, and we, I guess we don't predict, we react. So we need something to happen in the chart to then make a decision, okay? Very different styles of doing it. I'm not saying one's wrong, one's right, one's wrong. I'm just telling you how I do it. I'm a trend follower. I don't like to predict. And the reason why I don't like to predict is because I honestly believe I have no idea what's going to happen next, just between you and me. So I can only react, and react based upon what other investors are doing, but in the belief that investors who are buying Quanta Services right now are doing so on the basis of where they think the price is going to be. Not now, but in a few months, in a year's time, in maybe 18 months' time. We know the market looks forward. So the supply and the demand we see on screen is not based upon what's happening now. It's not based upon what the Fed did last week. It's based upon what's going to happen in the future, okay? And on that basis, we can see that there is an overwhelming excess of demand on the screen. How do I know there's excess demand? Look at the bloody price. It's bottom left, top right. In terms of how now that's the obvious way. That's where you start, bottom left, top right. But then I like to get a little bit more specific. I measure the trend in two ways. I measure the short-term trend and the long-term trend, okay? And the way I do that is through my two value zones. If you're not sure what they are the 21 and 34 exponential moving averages for the short-term trend, and then the 144 and 233 exponential moving averages for the long-term trend. It's so important you use exponential moving averages. Simple moving averages don't work. Most of your basic media style technical analysis is based upon simple moving averages. So, oh, hey everybody, we closed above the 200 a simple moving average, or the 50-period simple moving average. They're the two popular ones. Completely useless. Don't bother with those. You need to have exponential moving averages through the maths. Hey, it's irrelevant how the maths does it. It just does it. It gives a greater weighting to the more recent data. Moving averages are slow. They slow price down, especially the longer term you go. It's not a bad thing. A lot of people say, hey, moving averages, they're too long term, they're too slow. No. If you're measuring a long-term trend, they're perfect. Okay, but you can use them to measure short-term trends, but make sure they're exponential, because you're going to get that weighting towards the more recent data in the sample. There's my short-term trend. It looks wonderful. And we can see not just how the short-term trend tells us what the direction of the trend is. I mean, that's the best bit about it, but it also shows us points where the market pulls back. And that's why I call it the value zone. So I'm looking typically to buy as close to that value zone as I can get with some nice price action signals. We'll talk about that in a second. There's my long-term trend. Notice also that the long-term trend ribbon, for some reason, I don't know why, and honestly, I don't care. Who cares why it works? It just works. You drive your car, you've got an internal combustion engine, everyone. Do you know how that bloody thing works? No, you don't. I don't know how it works. It just works, and I don't care how it works as long as it keeps working. That, ladies and gentlemen, my dark green zone is an internal combustion engine. Just keep driving it. Okay, so we can see that in the long term, the long term, the fund managers, they are buying this one. In the short term, the traders are also buying it. Happy days. Okay, let's go to the next stage, which is the price action. And from here, because moving averages can be quite slow, especially when you make them longer term, and notice the durations I use for your Fibonaccios out there, 21, 34, 144, and 233 are all Fibonacci numbers. I wonder if that's a coincidence. Did I do that on purpose? No, I didn't do that on purpose. I just mucked around for a very long time, as in well over 10 years, to find these moving averages, to find the ones that work the best. And I happen to find that these ones work the best, probably because it's self-reinforcing, probably because there are huge quant funds, hedge funds, whatever, momentum funds out there using these things, and that's why I think they work. But I digress. I was going to say that they're a little bit slow. And what's the fastest thing you can do is price action, right? And this is your peaks and troughs coming in here. And we can see how the price action here is actually pretty good. Nothing in there. There's one there, and up we go. And in terms of your price action, you want to see nice, clean price action. Okay, high peaks, high troughs, but not just high peaks and high troughs, because you want to see the motive phases, the movement in the direction of the trend as based upon those like dark green zones. You want to see big moves here, right? So we want to see big moves here and tiny moves here, as small as possible. Big moves here and tiny moves here. You get the picture, okay? And one way we can explain it or express this, that's probably the right word. When this is occurring, you will find that the last trough is at or above the second from last peak, okay? So here's our last trough, our last with two S's and trough without a T. And here's our second last peak, okay? And you'll find that there should be, well, at least this, meeting each other. That's your, I was going to say worst case scenario, but they can be meeting each other, but preferably the last trough is above the second from last peak. And this is telling us we've got great price action. And there you go. That's what we're having here. So this is all good. And the final flourish, okay, and this is all I do in my technical analysis. Hey, there's a little bit of volume and volatility that comes into it as well. And maybe we'll get through that today. But this is all I do for technical analysis is my candles. And I want to see, now we're drilling in. Look at this. We are literally drilling in. I am literally zooming in. Within the price action now to find out what's going on a candle by candle basis. How is that some supply and demand manifesting itself each session? And yes, we're zooming in. Yes, this is a very short-term way of looking at the market. So you can see I started down here, long term, went a bit more shorter term, went a bit more shorter term again with the price action, and now finishing with the candles, okay? And the candles look really, really good here. I want to see white candles. I want to see lower shadows. In an uptrend. I want to see, I don't want to see black candles or upper shadows. And this is ticking so many boxes. Look, last night's candle wasn't fantastic. We got the black candle, we got the upper shadow, but it is tiny in comparison to the candle before it, which was all demand, actually quite a bit of supply removal, I suggest there, looking at the volume downstairs and the volatility as well. Very impressive. We want upside volatility. We don't want downside volatility, okay? So I'm going to give this one, if I had to give this a score out of 10, this chart here, and this is where we've started today, wonderful start, I'm going to go 9.98 out of 10. And it's only losing that 0.02% because of last night's candles, not fantastic. Maybe it's a 9.8 out of 10. Maybe it's losing a little bit more. Look, could I buy, actually, look, even last night's candle is probably not enough to put me off buying it, actually. But you might want to wait for just one more white candle. Okay, so something that looks a bit like this, and it's going to change color in a second, I assure you. And it's going to go to this color here and have a little, you might want to wait for that candle first. Okay, that's all. Yeah, I'm going to wait for that candle. So let's say hold 100% hold. I mean, 9.8 out of 10, right? Just let me see that candle first. And look, I probably won't be here when it occurs because we only check these things every Friday when I appear in front of you magically through the vagaries of the internet. Wonderful, wonderful looking chart there for you, Phil. Why not? Why don't we head over to here now and have a look at the valuation for PWR? So let's type that in. And this is the Refinitiv Icon spreadsheet, or a spreadsheet I did source from Refinitiv Icon originally, but I have changed it a significant amount. You won't find the same spreadsheet in the platform, and I don't think you can even get it anymore. So I've probably got the only copy on the planet. And then I've done a bunch of stuff to it to make it do the stuff that I want it to do. But what it does, in its most basic sense, is collate the consensus from the biggest brokers in the world: Deutsche Bank, Citigroup, UBS, Bank of America. I've forgotten a bunch of them. But Refinitiv Icon, via Thomson Reuters, who's one of the biggest financial data gatherers in the world, says, okay, what's your, Goldman Sachs, what's your revenue target for this year, and then next year and the year after? And then they get them from all the different brokers and they find the average, and this becomes our consensus estimate here. Going forward, we can get some consensus rates of change, and we've also got the ability to drag our historical data, and what that allows me to do is to look for trends in the numbers. We just talked about how I look for trends in the charts. This is how I look for trends in the valuation. Okay, that's the most important thing for me. But anyway, out of the 15 brokers, they've got an average target for PWR Quanta Services of $190.27, which is pretty much where it is. You can see there, plus 0.5% means we've got a little bit of upside to that point. In terms of their ratings, because brokers not only give us price targets, they give us ratings as well. We've got 5 strong buys, 9 buys, 3 holds, and 1 sell. Generally skewed to the buy side there. That one sell's a little bit annoying, I mean, these are the smartest of the smartest. Let me tell you, they were the top 1% of their class, and then handpicked by Goldman Sachs to sit there in the team of analysts analysing this company. So make no mistake, they are clever. And if they looked at a company, and it's not just one person that looks at a specific company, probably a few analysts doing that, and they found a reason to sell, it's a little bit disconcerting, but we are skewed to the buy side. Okay, next place I go here is the EPS line. And much like in my charts, I want to see bottom left, top right. I want to see bottom left, top right here. So I want to see growth through global pandemics, through supply chain shortages and chaos, through interest rates going up through the roof, and all, again, the chaos that's causing. And can we see that? We can see that. This is a company that has made money through thick and thin, and that speaks to the quality of management. I often hear how important management is when making an investing decision by value investors who look for moats. All right, well, good for you. I don't care about management or who they are, I just care about their performance and track record. And then we can look forward to see what the brokers think about the earnings going forward, and we find that we get a 14% annual compound annual growth rate going forward for the next 3 years. And that is very good, because the rest of the market's probably going to give you somewhere around about 7, 8, or 9%, depending on if it's a moderate or a good year. So we're getting above market average growth, and we want to be able to pay around about the market price, or less if we can get it, but we're paying a bit more here. The market average PE is 15. That's a long-term average. Well, actually, in the US, it's a little bit more, to be fair. It's 15 in Australia. It's actually probably closer to 20, but don't quote me on that. I'd have to go Google it. And I have Googled it in the past. I just can't remember the number. If somebody could Google that for me, send it back to me, right? Really long-term, last 50 years, S&P 500 average PE, that would be great. I do tend to use Australian metrics here from time to time. Apologies. But 21.6, I would say, is not crazy expensive for a 14% compound annual growth rate. And my spreadsheet seems to agree with that. It's saying that the fair value for this company is about $206, not out of whack with what the brokers are saying. And certainly there are no red flags here to tell me that I can't act upon my technicals, which for me, was very good. Okay, so that's how today's session works. I won't have to explain all of those things again when we get to the next one. And the next one is AMBA. Now you know how it works. Why don't you type in the stock that you're interested in? There's AMBA, Ambrella Corporation. Now, it's missing a bunch of stuff, isn't it? Straight away, you can see it's missing a whole heap of stuff that the other one had. So we're probably not going to spend a great deal of time on this. It's important also to zoom out, ladies and gentlemen. Once you've done the analysis and you've zoomed in to look at those wonderful candlesticks to see where the shadows and the bodies are, it's important that you zoom out for your next analysis, because when we just zoomed in there, it probably actually didn't look too bad. Now we've zoomed out, you can see it does have some significant problems. One of the major problems being, I think, the big point of supply up here. We've got another point of supply developing here. The long-term trend is neutral at best with the amber. So it's a traffic light system. Obviously, green is up, amber is uncertain, and dark pink is down. If you don't believe me and how good this stuff is and how it works, my gosh, it is just sometimes you just think it's magic, don't you? And then when you break through and you can't get back above, it's over, ladies and gentlemen. Don't fight it. So I'm going to go pass on this. I don't think I need to spend any more time. The trends aren't right yet. The price action looks okay, not great. The best thing about this is the candles and the substantial number of white candles we've seen through here, but there's just not enough to get me going. Hey, if it was to do something like this, right, then I would look at it, and no doubt whoever wanted me to talk about this one, Mike, will ask me again on that Friday, and then I'm sure I'll get very excited about it. Will I look at the fundamentals on AMBA if I've got no intention of buying it anytime soon? Why would I waste my time looking at the fundamentals? Let's get on to Perry's, which is DBX as the first one. That looks very good. Look, more of a developing long-term trend, and you can see here, very important, I haven't talked about this yet, how when we break above the long-term trend, when it's changing, it's important that we come back, we test it, we hold it. That's the key. That's how you know something has got a chance of turning around. What's happening in this light green box, that's what it's all about. Very good since there. You can see the price action is immaculate since then in terms of the big moves up and the tiny moves down. Tells me that, yes, it's gone up a lot, but there's just a huge amount of demand in the system. And yes, it's gone up a lot and very few people are selling. The other good thing about this that Ambrella didn't have is the fact that it has eclipsed, I think, yes, it has indeed eclipsed that. And really, this is a point of, it's not really a point of supply, it's a zone of supply, isn't it? So we often call them a POS, point of supply, and there's one here. But when you've got them all coming in around the same area, and there's a reason for that, they're all related to each other. This is, really a zone of, I've never used that before, have I? That acronym is ZOS, a zone of supply. And this is, you can see how we took some time to get through it. We had to spend a few white candles here, but telling you that this time we're going to get through. If you look at the last few times, look at the little upper shadows here. We didn't get through these times, but look how the market reacted there. And what is the word? There's a really fancy word, starts with M, everybody. What's the word we use to explain or describe what supply is doing in these candles here? And then, in particular here and here and here and here. What's the word I'm using for supply? It starts with M. Okay, now it certainly M'd itself over here. Supply certainly M'd itself over here, but supply did not M itself over here. Okay, and in fact, we got the opposite of the M of supply, the M'tion of supply, and in fact, it was just pure demand. This is very good. I've got no complaints. There's probably going to be a little bit of a point of supply in here because the old point of demand should act as a point of supply. But really, I think that this is the next level here. Manifesto, says Max. Well done. That's the word we're looking for, the manifestation of supply. It's one of the most important words I think we use here. Because I think a lot of people in technical analysis, they're looking for patterns, head and shoulders, or double tops and double bottoms. And those candles are just pinpointing where demand and supply manifest themselves in the market. And I'm a happy buyer. I can't see any reason why I couldn't add a third. I'm going to be a bit of a wet blanket here, Perry, and say, well, Perry, it is a bit of a ways away, isn't it? It's a bit of a ways away from our light green zone. But I don't mind just when I see a chart that really just, speaks to me. That's not where I want to go. That's where I want to go. I don't mind just dipping the toe in the water. This is why I do plus 1/3. Whatever you usually invest in a stock, or before you ever heard of me or met me or heard me speak, whatever you used to invest in a stock, I say divide that by 3 and make that your first purchase. I don't care if it's the most 10 out of 10 stock you've ever seen. I still only get in 1/3. It baffles people, it mystifies people, it puzzles people. And the reason why I do that is I don't know what's going to happen next. Now, if the stock continues to do the right thing, I dip a little bit more in. Maybe I go in up to the knee, and then, the third time I'm in over my head, perhaps. But the reason why we're only dipping the toe in is we don't know what's going to happen next. We might find something lurking under the surface. Look, I think that's more important for your turnaround plays, and I would classify this as a turnaround play. Let us head over to here, because now I'm curious as to, I didn't even look at the name. Isn't that wonderful? I didn't even look at the name. I've got a Dropbox account. I use Dropbox. I didn't even look at the name. And how important is that, ladies and gentlemen? Did you need to know the name? Did you need to know what it does? Maybe you don't. Maybe the less you know about a company, the better you might trade it. That's my feeling. Okay, we've got 11 brokers here. We've got only a little bit of in the price target, 26.89. I'm going to say a little bit more polarizing in terms of, we've got 2 sells now, 5 holds, the six better than buy, or buy or better. In terms of the EPS line, it's been very good. It has been very, very good through here, and it's continued and should continue to do so. But look at that. See, a little bit of slowing growth. Hey, why do the brokers think Dropbox growth is going to slow down in calendar year 26? I don't know. I don't care. They just do. They're way smarter than I am. Now, could I go and do my research on Dropbox and figure out why it's going to slow down in 2026? I could. Would there be any point in doing that? Nah. So why do it? Why waste your time? Why waste... there's so many better things you can do with your brain. George Costanza, in a particular episode of Seinfeld, comes to mind, where he became all brainy. He abstained from a certain activity and became really brainy. To be like George Costanza in that episode and stop thinking about what companies do. Anyway, 6% is the compound annual growth rate from here. And that's a little bit less than the market, but we're getting a significant discount to market here at 12.4. Now, that would be ordinarily a good thing if it wasn't a kind of 12.4 kind of stock. And it's not. The PE has been way higher. The market's paid way more for Dropbox in the past. It's paid up to 15. I'm not sure if that's the right PE. I certainly wouldn't go... No, I'm going to have to go target here. I wouldn't go dynamic, because it would bring in... Oh, well, that's not too bad. Yeah, I think I can go dynamic. 16.7. So we're looking at now historical, the median historical, which actually might include that. And then... Oh, no, dynamic is everything. Sorry, dynamic is everything. Yeah, when I go dynamic H, that's historical, and now it goes through the roof, because the median of the historical is 52, or 55.97, I should say. So I don't think the future one. I think the future's too low. I think that's too low, and I think dynamic. I think at 16 is not bad. Starting to make this a little bit cheap here, okay? But I can't see anything, any red flags there to tell me I can't go and buy Dropbox. How about that? Okay, let's pick up the pace a little bit, ladies and gentlemen, because I know Perry's generally gives me some really good charts. So let's go to ASXM, which is not that one. Maybe you've ASXM. No, I definitely typed it in right. So let me know if I've done something wrong there. Perry, let me know. Maybe you've got a typo at your end. AMPH. Let's skip to... Oh, whoa. Have we looked at this one in the past? And if we haven't, why haven't we? Because it's been amazing. Look, Perry, you know what I'm going to say. It's just a long way away from my light green zone. And give me some credit here, because I think that's your perfect place to buy. And if you had asked me about it on that day, I would have said 10 out of 10, buy it. In fact, that one's those two, that little cluster there is pretty good as well. And the reason why that cluster is really good is that you've got your POS here. There's your response to the POS, and there's your 2 little shadows pointing down saying nothing to worry about. In fact, and this is here. So I know I'm going backwards to tell you where I would have bought it. I wasn't here to tell you, but amazing. Too far from the light green zone for me, Perry, but just a picture of excess demand, isn't it? I'll leave it to your own devices as to whether you want to buy that one or this one. Again, ditto. You know my view on big gaps up through there. That didn't go exactly to plan, so let's draw that one. And then it's just a matter of waiting for the next move. And that's probably the candle there, isn't it? That's probably the key one based upon my teachings. Okay, a bit too far from the light green zone, but as I said, I'll leave it to you. AXSM, no worries. There we go. Oh, wonderful. Look, this one, I don't think this one is too far from the light green zone. And everything else looks really amazing. And we've got this big consolidation path through here, which we've broken through. And if I click this and we're blue sky, we're not, but that's okay. Nothing to worry about to there. A little bit, maybe $100, but I think it's okay. Yeah, no complaints on this. So we'll go plus 1/3 on this one. Happily plus 1/3 on that one. Hey, the other ones are good too. And I think you'll find if you buy them, they'll still go up. But again, I pointed out all those examples in the past of where I would buy. So what we're going to try and do for the rest of this hour is find those charts that are doing all the good stuff that we asked for, but just a bit close to the green zone. That's all. Plus 1/3 on that one. Oh, should I look at okay, we'll do this super quick here, as quick as Thomson Reuters can spit out the data. There we go, seeing as we did the plus 1/3. Not a lot of data here, not making any money, so I won't be able to give you a valuation. In fact, an odd one, because in fact, all these are still retrieving, so I need some Muzak, some elevator Muzak. Come on, Thomson Reuters. There we go. Okay, there we go. Officially, that all makes sense now. Not making money, not going to do it until FY25, so I can't give you valuation. Let's keep moving. Say no more. It's up to you whether that bothers you or not. Let's go to some of the streamers here. NVTS. This is from Marco. Welcome, Marco. That reminds me, Jason sent me a couple on Twitter and I forgot to do his last week. So I'll be in big trouble if I don't do them this week. And I'm going to do those next. I have found them. But this one for Marco, NVTS, Navitas Semiconductor. Oh, it's got the right word, isn't it? It's a semiconductor. You got my attention. And because it's a semiconductor stock, we can see around about here when NVIDIA released its update, got a bit of a boost, got a bit more of a boost, probably released some of its own earnings, pulled back to the light green zone, and up she goes again, pulling back to the light green zone now. Look, I could buy it, I think, Marco, if it was to throw in another nice white candle at that zone. I'm not a buyer right now, but continue to watch it. It's got all the hallmarks of something that could do very well, but I think we want to see the next white candle coming in. I'm happy to give it a bit of upside. I'm happy to give away a bit of upside to see that showing of demand, to tell me that actually look, it's the more I zoom out, the better it looks. A nice turnaround here, really solid. Just so many white candles coming in, but some consistency here on the sell side. So let us see how the demand side responds. Let us see it come back with a big white candle. And then I think it's going to look very good. You know, we're above that point of supply there. We're probably responding maybe even to that point of supply. Anyway, I don't think we need to spend any more time on this. I'm happy to hold it, and I'll give you where the hold thesis starts to break down. What we don't want to see is if it sort of rallies off here and then starts to go back down again, and you know what that means. It'll be POS. And in that case, you'd be watching for the potential break of the pod theme, okay? Let's do Jason's picks, which are ARCO and GE. Let's do ARCO first. Oh, that looks very good. Arcos Dorados Holdings sounds very exotic. I'm going to go back to my default zoom. Looks pretty blue sky to me. I can double check that here. Bit of a point of supply over here, but that's old enough for me not to worry about it, I think. The market has a memory, but that memory only lasts so long because the people who are focused on that have had plenty of time since then to act upon it. Okay, get out of the market. Look, I'm going to go happy hold here. I'm not a buy. I think maybe $10 might be at the tiniest of a psychological impediment. I think the upper shadows over the last 3 days, very small on the third last, but growing, I think, through here is enough for me just to sort of hold back on a buy, but certainly a very confident hold on this. That's not what I wanted to do on this, and the price action looks very good. Clean white candles, no upper shadows would get this up to a buy. Confirmation of this point of supply here going on to act as a point of demand would all be good ticks with some nice white candles in there. So happy holder, just going to squeak away from a buy on that one. Jason and GE are going to fall in the same camp here. It's been a fantastic trend, and you can see many, many places along the way where my model would have purchased, and the long-term trend very good there. And this big move up here, it's wonderful, isn't it? This huge move, tiny pullback in here, that's where you're buying. You're buying like crazy in here. You're adding some more in here. You're adding some more on that candle. You're adding some more on that candle. You add some more on that candle. Imagine the position you could have built up on GE by now. And really very little reason to sell it based upon my model. It hasn't, the only demand, a point of demand it's taken out, I reckon, is here. That's the only time in that series. No, there's a little one here as well. And you'd have to go back and double check it. But in each case, it didn't close beneath that low. And you'd come back on that candle, at the end of trading, when it's early morning for us, and you go, oh, okay, I don't need to do anything. We didn't close beneath that low. So you would have hung in on all of those and probably bought some more here. So I think you're still pretty much loaded up with GE. This candle frustrates me. This is a pretty confident follow through in terms of supply, also taking out what was, actually didn't take out, was close to it. Pardon me. Didn't quite take it out. But I would say, look at this low here, and it is 103.41. So I'm going to go close less than 103.41 equals -1/3. Okay. And if you had built up, let's say you normally buy 3 shares of GE, 3 shares of GE, 3 shares of GE. You didn't get them all, right? There were better things to do on those days. And you had built up a position of 12 shares of GE. Well, this means you're selling 4 of those shares, doesn't it? Okay, which means you'd have 8 remaining. That's how the model works. Okay, and then you're looking for the next signal to get out of, well, you'll have 8 left, so you'll sell 1/3 of that. You could end up, and you'll end up with odd lots, right? And it'll be really crazy for you to do. Eventually, you'll have to round something down to get out, or round something up to 1 share and get out of it. And it kind of can't be done. In many ways, it can't be done. And your practical application will be different. You might sell more shares. But where it does work is if you're a giant hedge fund, right? And you're trading effectively with 0 commissions. But here's a place you can trade with 0 commissions. And this is where my methodology starts to work, okay? So if you have the ability to trade with 0 commissions, and you can, by the way, do that by opening, I'm just going to go to my demo account here and log in. And this is our Think Markets web trader. And all of our CFDs are commission free. Now, there are other costs associated with CFDs, and you should check those out. But if interest rates are so high right now that if you've got a good cash management account, you can mitigate most of those financing costs and therefore get all the benefits of commission free. So if I type in something like GE, I go to General Electric. If I'm selling 1 share of GE, I'm doing it commission free. It really doesn't matter. I can really trade like a hedge fund under that model. Now, we are one of the few CFD providers out there that offer you commission-free trading on US shares. Many of them will charge you substantial amounts of money. So if you don't have a Think Markets account, well, the most obvious thing you can do is open one. And if you're not trading CFDs, the most obvious thing you can do is learn about them. They're not for everybody, but they may be for you. And you won't know if they're for you if you don't bother learning about them. Let us keep moving here. So we're more like a get out in GE, so I won't do the fundamentals on that. I'm going to head back to the Zoomers. I'm going to do Amazon. So there's a chart I want to talk about. I'm going to keep trying to type it in. There we go. Great move up last week. I might head back over here because it'll have my previous scratchings on Amazon, where you can see plus 1/3, plus 1/3, plus 1/3. We had a potential minus 1/3. In fact, I said to minus 1/3 on that candle because it was awful, but you would have come back the next day and said, well, I probably didn't need to. Okay, so whether you got out there or not, that's your business. But I reckon you're still carrying plus 3, if you've got in 3 shares each time. The reason why I say 3, if you buy 3 shares, you can sell 1/3, which is 1 share, right? So you might have 9 shares on Amazon, and then we'd be looking for where you'd be looking to sell them, sell 1/3. And we probably we're looking maybe up to yesterday, maybe on a close. I think you'd be very aggressive to put a close beneath here, but I think you are still have an understanding that a close beneath there would have been 1/3. Anyway, you didn't need to do it, is my message. So you're still holding on. And what last night's candle represents to me is the most obvious plus 1/3 that you'll ever get. So that's an ad for me. So this is for Colin, who no doubt has Amazon and is asking from the perspective of, well, Carl, what should I do with it? Well, I think, Colin, I'm not you. You do whatever you have to do. This is general advice, but I would hold on to it. And in fact, Colin, I'd be looking to add to it because we really don't have anything too sinister now in the supply until we get into that area there. So let's look at it there and see what the candles give us there. But otherwise, what an amazing looking chart. I can't see it in any of the requests here, but so I'm going to do them anyway. So I want to do the big techs. So we're going to AAPL, doing APPL. Okay, so Apple, I do know some of you do have this one. Maybe you're not asking about it because there's just no question as to what you have to do, which is 100 million% hold on to it. And really, last night, it is just so simple. Copy, and we go paste, and then I put that there because that for me is another entry signal. Now, don't get me wrong, I could be wrong. This could be the highest price for Apple for the next 50 years. I don't know what's going to happen next, ladies and gentlemen, and nor do I care, really. It's just about adding a little bit of risk, taking a little bit off, and just following the charts and not stressing out about life too much. Because if you follow the trends, I think, as you've seen, you should be on the right side of the market most of the time, okay? Not all the time, but most of the time. And we've got to see, you should only be scared about losing money if you don't have a system for getting out. And you have a system for getting out. That's what you have here, okay? Everybody else, oh, what should I do next? You know what you should do next. Whether you do it or not, that's your business. Plus 1/3. MSFT, I'm a little bit more concerned about this one. I know I said plus 1/3 here on that candle, and this is a great example of I don't know what's going to happen next. That's an awful candle. A shallow pullback though, and what we're seeing, I think, is pullback to the old point of supply here. Now acting as an area of demand. It wasn't ideal point of supply here, acting as a point of demand. Last night's candle was good. I'm going to refrain from going plus 1/3 on that because I don't like this candle here. Okay, so that is prohibiting me from going plus 1/3 on this. Okay, but otherwise, happy holder. Did you need to get out a third on that candle? No, I don't think you did. I don't think it constitutes an exit because it's just not substantial enough compared to the day before it. And these weren't decisive confirming candles. They still had lower shadows, and then we're still above here, and we didn't get beneath here. So no, I don't think you need to get out, but I'm just not going to add any more on that one, if you don't mind. And let's go Google. Here, in fact, I think I said this, minus 1/3, if not on that black candle, because now we can see just how substantial a substantial candle is. So minus 1/3 on that. I don't think this candle here was convincing enough to prevent you from doing it. So I reckon that's the one you would have done. And then the problem here is this close here. So I reckon you're minus 1/3 on this one. So let me just go copy paste. Okay, now whether you did it or not, based upon this candle, you could have refrained, but you can see here this trend is not as good. So I think you've still got some skin in the game. You can see there are 3 plus 1/3 here, right? So you've definitely still got some skin on the game on Google, but I'm not going to add to the Google candle. That's a wonderful candle, but I'm concerned about this. So if I'm going to compare, say, Amazon and Apple to this, and I've got a limited amount of capital to apply, which is everybody, I'm going to refrain from doing the plus 1/3 on those. I think Meta still looks really good. We've done lots of buying on this, maybe a little minus 1/3 there. You can see we still had 2/3 remaining, but what we didn't do is cover it since then, and there are so many opportunities to add that risk back in. I think this looks great. I can't see any reason not to do 1/3 based upon last night's close, so I'd happily go there as well. And we're just comparing and contrasting how you can differentiate between different opportunities using the candlesticks. Okay, let us keep moving. Where should I go, left or right? Let's going to go to TTD, which looks great. Trade Desk. I wonder what these guys do. Trade Desk. I don't care, but I trade at a desk, so they might have something. They might do something similar to what I do. Trade Desk. I think it looks fine. Is it knocking my socks off? My socks are still attached, I can assure you, but it looks good. I'm a happy holder here. I don't think I'm a buyer. I don't need to explain why. I've explained why already up to this point. But I can hold that one. What would turn it into a buy if you don't have it? A big white candle with no upper shadow anywhere around here would be sufficient. Am I worried about this point of supply? I am, actually. But look, if I've got a nice clean candle, I can overcome my concern about this point of supply. A nice, clean, no shadow, long white candle, probably closing near or even a little bit above $80. And I could forego my skepticism about that point of supply on the basis of the strength of everything else. If you do have it, I don't know if you have it, you might do, I'd be looking at an area around here potentially to lighten the load. Okay, if we're closing beneath there, that's not a good sign. If we are starting to make lower peaks, again, just be a little bit careful about that. But apart from that, it looks fine for me. The other one is just letter Z, which is Zillow Group. Now this one looks really interesting. I don't think I'm a buyer just yet, but I could be a buyer very soon. I think all you're really waiting for, once again, is that confirmation that we can, in fact, I think it's actually very simple. And let me do this, and I'll write some stuff on the screen for next time, that if we saw that, right, if we saw that, for me, then we go plus 1/3. So if we see this candle, plus 1/3 for me, okay? Because everything else is good. We have seen, look at this dark pink zone. Look how wonderful. You know, again, this is why you don't have to worry about buying stuff, okay? Because the market is going to tell you. The market will tell you if you bought it here. So if you bought it on candle, let's call that candle 1. The good news is, like, the market told you pretty quickly that you just pretty much bought the top of this one. You know, I always buy the top. Carl, mate, sit down and let me tell you some stories. All right. Let me tell you about all the times I bought the exact top of this thing. I didn't buy it. I didn't buy it. And then just out of spite, I bought it. And guess what happened? It went straight down. Okay. And then what did you do? You hung on all the way down, didn't you? You hung on all the way down and cursed your bad luck. The great news is that even if you do happen to buy on the top, the market told you and told you and told you. The market is always talking to you, ladies and gentlemen. It's just the market's out there, and this is happening every day of the week. And yet, how many people have tuned their ears in to listen? Look at the candles. Look at the lower peaks and lower drops. Look at the short-term trend changing through amber, through light pink. Look at how the long-term trend changed. Look how we went from supporting price with that long-term trend zone to restricting it. Okay, right through here. That's your killer, and then it's all over Red Rover from there. Now, I don't know what this thing does. I couldn't bloody well care less, but I'm sure it was, I don't know, maybe it was a bit blue chip. I don't know, maybe it was a bit exciting in the tech boom. But whatever it does, look at that, all the way down again, all the way down. Don't know when to get in. Okay, well, now we do know when to get in. And if we get in and it doesn't turn out, we'll get the hell out again. Don't stress about these things, ladies and gentlemen. Okay, if I'm making this sound easier than it probably is, I actually don't think it's that hard, to be honest. And this is not about getting rich quickly, because this is about putting tiny little bits of your money into the market, hopefully in a bull market, and doing better than the market. My goal is not to make 1,000 million% by Friday, by 5 o'clock Friday. My goal is to beat the market. If the market makes 10%, I want to make 20%. If the market makes 20%, I want to make 40%, because I should be able to do that. If the market's down 10%, I want to break even. They are my goals, okay? Set your goals right, okay? Do you know how many times I have just done a bunch of renovations, tradies coming over, say, oh, what do you do, Carl? Because they see all my lights and my cameras, and I say, oh, this is what I do. I don't want to be a tradie anymore. If you're listening overseas, a tradie is a tradesperson, okay? So I've had bricklayers, stonemasons, carpenters, you name it, they've been to my place. Carl, this tradie stuff, it's too hard. I'm literally breaking my back here. I want to trade. And I said, okay, what do you want to do? Well, I want to replace my income. Well, how much are you making? Oh, I'm making 120, 150 grand a year. I work hard though. I said, okay, well, how much money have you got saved up? Well, I've got about 10 grand. Okay, so you got 10 grand and you want to make 150 grand a year. Okay, well, now we've got a problem. look, if you want to make 150 grand a year, I can help you do that if you've got about $1 million to start off with. Okay. Let's keep moving. LLY, happy holder, no complaints. I did the 1/3 before. I don't think I'm going to go another 1/3 here because you can see the upper shadow. That's a bit of a problem. But otherwise, there's nothing sinister. There's nothing to worry about here. Look at this. The first rule of trend following is I don't know what's going to happen next. The second rule of trend following, I'm okay with that because I've got a plan on how to get out. From Kirsty, AREC. Let's have a look at this one. Oh, look, it looks good. I mean, it's doing the right stuff, isn't it? It's trying to turn the corner. Oh, you got me on this one, Kirsty. I'm not so sure. And if I'm not so sure, that's probably enough, saying enough about it, isn't it? But there's some really good stuff. I love this candle. My eye is drawn to that candle there. I love the fact that we broke above the long-term trend zone. And look at these two little shadows there on those two candles. And boom, 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 up we go. This is looking really interesting to me. I'm going to get rid of all of those because I've covered up the two little shadows here that you want to look at. And then that off this. So yes, I think that's your day to buy. And then we got this huge blow off. Actually, this candle here is very good. And then last night, I'm not so sure again. It's a keep an eye on. Ask me about it again next Friday. Okay, for now, if you've got it, happy holder. Would I buy it? Not based upon that last candle, but it is very, very solid indeed. ESPO. That looks a nice trend. The Van Eck Video Gaming and Esports ETF. So you're getting a bit of a sprinkling of stocks in that sector. Looks fine. Look, no complaints. Do you need to sell it? No, I don't think you need to sell it. Do you need to buy it? It's hard to say because these candles can be a bit blocky, can't they? But look, the next, I know there's a white candle last night, but the next white candle. Okay, so one more, and then I'd happily add some risk on this, assuming, of course, as I always assume, that it is the best thing you can do on that day. Okay, and that's an important caveat, isn't it? Really, is it the best thing you can do out of everything you've seen? Okay, and I've given you plenty of tips today as to how to compare and contrast at the very, very fine detail, different setups. SDGR, a bit of a problem last night. So this is one we did a plus 1/3, okay, and fine until last night. Last night we're in pullback phase. Is last night enough of a reason to exit this one, to exit 1/3? It's pretty close. It's not a good candle. I'm going to go, no, I'm going to go hold because we're still really, really, very much, this is the candle that's in play, right? This is the candle that is still very much the one you want to watch. So if we're starting to close, say, beneath here, then it's probably more like an all out. If we are going to do something, we might, let's say you get a little up candle tonight and you start to do something like this, that's when we're going to take some more action. But I think this is why we only dipped the toe in the water, because I would have said that was probably the best setup you would have ever seen in your whole life. Last week. I'll have to zoom out and see what there. Look, I'm sure I raved about it, and maybe that's why you bought it. So this is why we dip a toe in the water, okay? But I'm going to go hold. It's a hold, and let's see how it develops from here. Ask me about it next Friday, okay? That's from Daniel and DBX, which is Dropbox, which we've done. Great candle. We talked about that one. Perry, I need to remember to do everything in here because I reckon I did it in here, and then all my scratchings have gone into the wrong place. So I will maybe transpose those. I'll go back through today's recording and transpose all my scratchings into this chart so we can come back. And it's so important, I think, that for you, not for me, I know this works, but for you to come back and say, oh, look at those little plus 1/3, or look at that plus 1/3, and then went straight down. How did we deal with that? CAH, again, from Perry, looks amazing. I can't see any reason why you can't buy this one. There's it plus 1/3. That's not text. There's the text tool plus 1/3. I don't think it's too far away from the light green zone. Happy to buy that one. And STVN, you notice I'm not doing the fundamentals because we just don't have time. We might come back and do these. Stevento Group, what a great sounding name. I don't know what they do, I don't care, but I'm happy to buy it. I don't think it's too far away from the light green zone. Just the string of white candles really attracts me on that one. Chris asking for ALGM. I think it's very warm. I don't think it's hot. I don't like all of this stuff up here, the candles, it just worries me a bit, okay? There is supply up here, and I don't want to muck around with it, okay? I think if you had it, I would say hold on to it and see how you go into those supply levels. But I don't think I'm quite a buy here, because I think I've seen some better stuff out there than this one, Okay, that's for Chris. CVNA, this is the Carvana. We said I think I called it a specky buy, but I don't think I put the plus 1/3 on there. I don't think it mattered. I don't think you're too late. Would I go plus 1/3 based upon last night's candle? I think last night's candle was actually pretty interesting. I'm disappointed somewhat, Chris, by the overlapping price action through here. See the bit of an overlap? If it closed on the high, I would have said yes. I think maybe, like I've drawn so many times today, and it might frustrate a few people, I think just that one more white candle with a really strong close, I think is all you're waiting for here. And I think if you get that, then I am a plus 1/3. So I'll even type that in. That's how close I am on this. So if get candle plus 1/3, okay, on that one. How are we going here? Major says, no, Barry, not major, manifest. So that's going back to the quiz I gave you before. But thanks, Barry, for chipping in. And let's go to Max, who did get the question right. Manifesto, Maxo. Max Tomo. FLNC. Try it again. FLNC. There we go. Florence, let me zoom out. It looks good. See the pesky black candles in this one? See all the pesky black candles? The leopard doesn't change its spots, and that's why I'm not as excited about this one. I wonder if I've covered this in the past. It sounds familiar. I wonder if I told you about all the pesky black candles. I can still, that candle there is really nice. This candle's really nice too. But even after you get good candles, it still somehow prints black ones. Look, I can't remember what I said about this. I suspect maybe I haven't said anything about it. There's no markings on the screen. I'm going to go hold it if you got it. I'd be watching, a close somewhere around here because you're taking out this little point of demand and you're taking out a couple of the old points of supply. That would be concerning and starting to get beneath the green zone. Not a good look. I don't think you need to sell it, but I can't see any reason to buy it based upon the candles I'm seeing. Okay, that can change. The candles get better, but I'm going to go pass on that one for me. So just adding some color here, Max saying it bounced off my short-term zone, almost to a cent, finished back up to the open. I think we need to see, all those white candles I've drawn today, Max, that's yes. And Max's next words, ladies and gentlemen, or still waiting on a good candle, question mark. You nailed it. Well done. Perry correcting the AXSM. I'm at the bottom of that list. What are the light and dark green EMAs? Marco might have tuned in late. So the light green EMAs, Marco, my 21 and 34 exponential moving averages, and my dark green EMAs, if they are dark green, are 144, 233. I'm going to give you an opportunity. Last call here. I can do maybe one more before I have to run off to Ausbiz. If you've got it, actually, sorry, I can see. Don't do it anymore because Walt, I missed yours. Walt has two here, DHR, which is in trouble here. I'm sorry, Walt, to say that is heading in the wrong direction for me. Not to say that it won't be a buy somewhere down the track. Keep asking about it. I'm not going to spend any more time on it because if you've tuned in since the start of Walt, you will know that the trends are all heading in the wrong direction. Too many black candles. Price action's not clean enough. So I'm going to go pass on that. And I respect you might have asked about it because you think it's the most wonderful company in the world, and that's fine. For you, it's just not how I do things. Qualcomm is one I do know about, and I'm going to go ditto on that one. And maybe they're undervalued. Maybe that's why you're interested with them. I don't know. There's just not enough interest in the market to get me excited about them. So when the market gets excited about stocks, I get excited about stocks, and we're just not there yet. I did see a couple of people type in something else. Hi, Carl. On Tuesday, you touched on the best time to buy Australian stocks. Do you do the same? Yeah, so you can just get up early in the morning. It's probably better for you Sydney time than it is for me Perth time. Was it the other way around? No, I think it's better for me Perth time. Yeah, it's fine for me Perth time, but I think it's probably better for you because you're up earlier, later. Anyway, forget it. If you can get there towards the end of the candle, that's a really good time to do your research and then to place your orders. Okay, so same ditto on that one. And Glenn stuck in with the last one we'll do today, which is SNOW, which is looking better, isn't it? It's trying to do everything we want it to do, Glenn, but it is being held back a little bit, I think, by this point of supply up here, which is continuing to offer us some resistance to the upside. Last night's candle, very, very good though. And look, even if it had that extra white candle, I'm probably still not a buy. But if you love it for whatever reason why you love it, and you wanted to have a go with another white candle like last night, if that appears tonight, then happy to go there. Ausbiz is sending me a message to dial in, so I better head back over to here and tell you, of course, that we do have other sessions. If you are listening to me internationally, tune in on Thursdays, or at least catch the recording, because I do all the big picture stuff. You might not be as interested on the Tuesday sessions where I do the ASX stuff, but hey, there's plenty of education that occurs in those. Head to www.thinkmarkets.com/webinars to join in the Zoom session, but you're welcome also to continue to join me wherever you are and however you do it. If you're not a client of Think Markets, well, you really should be. No, not the shark. We've got all the stocks you want to trade here. Cash markets, we do have offices all over the world, and you can pretty much find us close to where you are and open an account to do that. But it's the CFDs where we really excel, and it's because of that commission free that I explained to you before that it really allows you to implement my type of trading. Head to www.thinkmarkets.com/OU if you're in Australia, but just do the com depending on where you are all over the world. We are an award-winning broker, and we get nominated all over the world for our platforms at our service. And the great thing is that you can speak to a real person. www.thinkmarkets.com. If you're watching on any of Ausbiz Want Me really bad, if you're watching on any of the streaming services, hit the subscribe button. Make sure you hit the thumbs up button to let me know you like what I'm doing. Apart from that, it's been a pleasure chatting with you today. All the best for your trading until we catch up again. Bye-bye for now. If you're watching me, if you're watching me, you are watching me. Everything we've discussed today is general advice. Please consider it carefully before implementing, and download our product disclosure statement for more information on Think Markets. Bye-bye.